Welcome to verifiedinvesting.com. My name is Benjamin Poole, head trader at Verified Investing. In this video, we're going to talk about currencies. We're going to go over the euro, the British pound, the Canadian dollar, the Japanese yen, as well as the DXY. So let's just go ahead and jump into the first chart, which is going to be the British pound. So here's just kind of an update of what's going on. We have this downsloping trend line that the GBP decided to break out of. And as you can see, it's gotten a nice bid to the upside after it broke out on the British pound. Another upsloping trend line that we're monitoring is this one that connects this pivot low here. Secondary hit, third hit, fourth hit. Price did look like it was going to consolidate right on that line and then break to the downside. However, it was in this clear wedge pattern. And then like any wedge pattern, it has two options. It can either break to the upside and make a further move up, or it breaks out to the downside and then has a further sell-off. Well, the British pound decided to break to the upside and now is heading higher. So what I do notice is, look, you've got 1, 2, 3, 4, 5, 6, 7 up candles in a row on the GBP USD chart, which means that we're starting to get a little bit overextended. I still think we have an additional upside move, but for me, $1.37 is where I would look to start exiting the trade on the British pound or start entering a short, knowing that I've got additional resistance level at $1.38. And the reason I like these levels is not only was this a previous price action, but it's also an overextended price move to the upside, at least temporarily. Doesn't necessarily mean it can't go up to these levels. And actually, that's where I anticipate it going. But we are now starting to get overextended. And if we jump over to the DXY, we can see that the DXY is actually starting to get oversold to the downside. Now, this isn't all the way overextended, which means that the DXY does have additional move to the downside. Right here at 96.90 is where the support level lies for the DXY. This is where the British pound is going to get a pullback, because the DXY will be into some support and bid to the upside. Now that we're on the DXY, let's go ahead and jump out in the charts a little bit more. What I've done is connected this pivot low here, secondary pivot here, and here's the third hit and then the fourth hit of this upsloping trend line. Because the DXY chart trend line goes back as far as it does, this gives me further confidence that this upsloping trend line will be support on the chart of the DXY, which is why I like 96.90 for a potential day trade or even a swing trade on the DXY. What I'd be watching for is would be the second or third hit, fourth hit, the fifth hit. It can break this upsloping trend line, and if that does happen, we would likely target this 95.55 level. And then if that broke, I would be looking to add to the position at 93.35 on the DXY. If you zoom out in the charts, as you can see, there was a lot of previous price action right in this area. So again, if it does break that level, this is going to be a ton of additional support on the DXY. And that would be a huge move to the upside on the British pound, likely taking it all the way up to $1.38, if not a little bit higher on this chart. So if you even zoom out a little bit further, you could go all the way as high as $1.39 or even as high as $1.42 before a pullback. However, if the first level of support on the DXY does get hit right here at 96.90, that's where I'd exit my trade. I know I'm jumping all over the place, but you've got to kind of take into consideration that as the DXY gets into support and the British pound gets into resistance, there's an inverse play. Obviously, the DXY goes up. If that goes up, the British pound will go down. Here, now let's go ahead and jump into the euro. Similar price action with what's going on with the British pound. Pivot top, secondary hit, third hit, fourth hit, price consolidated. Now, with the euro, we didn't actually get to the apex of this wedge pattern before we decided to break out. But as you can see, you got 1, 2, 3, 4, 5, 6, 7 up candles in a row into a lot of resistance. So what we're looking for is price to consolidate right underneath this resistance, and then we can make a push up to $1.19. That we would like to see the same thing happen, consolidation right underneath $1.19, and then we can make a push to $1.20, $1.2822. That's this pivot top. And the other thing that we're also monitoring would be the DXY. And where that would be for us to get additional information on when the euro is going to pull back. Okay, so this is looking pretty solid. Still similar up-sloping trend line as the British pound. Pivot low here, secondary hit, kiss that level, third hit, and then all of a sudden off to the races. We are getting overextended into resistance, but I still think we have a further push to the upside. Let's go ahead and go into the Japanese yen. The Japanese yen and the US dollar are pretty similar charts as far as like how weak they're being. So here's a pivot top here, secondary pivot, third, fourth, fifth. So this did favor a breakout to the upside, as the more times a resistance level is hit, the more probabilities it has to break to the upside. That's not what happened on the Japanese or the JPY. It actually had a nice bid to the downside. And now look at what it's doing. It's actually forming that nice bear flag at the lower end of the charts, which means that it's likely to head all the way down to 6177. You zoom out, as you can see, this was the pivot low from July 2024. So that's where I see the Japanese yen heading down. And this would probably do the same thing as far as the play goes. If the DXY gets into support as the Japanese yen gets into support, then we're going to have a little bit of a bid to the upside in one or the other. If the Japanese yen decides it wants to roll over even more, the DXY could head to the upside and vice versa. Usually you're going to get one bid to the upside. So it's fascinating. As you can see, the Japanese yen is heading higher, and you switch to the DXY, it's heading lower. So even though they're both staying a little bit weaker, they're inverse plays of each other. So one has to go up as the other one goes down. Same with the other charts. We just need a further move to the downside into the DXY, the Japanese yen pushing up to this downsloping trend line, and that would be a shortable level or an exit for a swing trade level if you're long on the JPY. All right, last but not least, let's go into the CAD. So Canadian dollar versus the US dollar. Downsloping trend line, pivot top, secondary hit, third, fourth, fifth hit. Now we're kind of entering this nice wedge pattern, or we're in this wedge pattern. What I would be waiting to do is see how this plays out. This upsloping or this downsloping trend line, the upper end of it is going to be a lot of resistance. And then the lower end is going to be a lot of support. And so you could actually play this all the way up here. So if it gets up to 73.77 and then pulls back to about 72.11 and then back up all the way to the apex of this wedge pattern. At that point, I would stop shorting or longing this and or figuring out which way the price action is telling us it's going to go. It's either going to break out to the downside, and then you're pushing down to this low pivot at 70.75, or you're going to break to the upside. And if that happens, you're moving at least up to 74.17. And then ultimately, I think you're coming all the way up to 75.90 on the charts of the CAD. That would be a pretty substantial sell-off on the US dollar, but that's what is looking like it's possibly going to happen on the Canadian dollar. But it has to break out of the wedge pattern either to the upside or the downside before I get any confirmation on which direction it's going to go. Nice wedge pattern. I love to see these in the charts. It gives you an idea of where price or the trend is currently going, and it allows you to play both sides of it. So that's what I have for you. Thank you so much for watching. Make sure that you're following, you're liking, subscribing, and then ringing that bell so you can get notified every day these videos go live or they get posted on our YouTube channel. And it's super helpful. And thanks for all the support that you guys have given us thus far on these new channels. It's super beneficial for us, and hopefully you guys are finding it as a benefit as well. That's what I have. Again, my name is Benjamin Poole, head trader at Verified Investing, and we'll see you guys next time in the charts. Have a great rest of your day and take care.